Hello, this is Ahura. Today, Friday, October 8th, I'm going to see what happened. We are going to see together, review together what happened yesterday in the market, what is going on today, and what we have to expect. As you know, finally, the Chinese market opened. The reopening of Chinese market after a long holiday with the positive environment helped the other markets also to increase. Chinese market was under pressure in the last weeks because of China Evergrande and some other legalization. As you know, the Chinese government started to regulate. The Chinese regulators mostly started to regulate and new laws, and these new laws put some companies, especially started from beginning was from technologies, technical tech companies or technical companies, and they were under pressure a little bit. After that, we had China American concerns that put the Chinese market under pressure, and these stuffs all together put the Chinese market to lose more and more in the last weeks. However, as I mentioned in weeks ago, that this is not the crash, and this shortfall here in the Chinese market is just creating a very good opportunity to buy and dip. And this return started, and since like we have so many signs that the Chinese government is not going to let China overground down, and they will start helping somehow with money injection, with the liquidity injection, or any whatever that they can. I mean, whatever it takes. They will not let this China overground concerns to lead to another markets, because it's not some small company. It's the 122nd biggest largest or biggest company worldwide. So it's not something that we can let it down so easy. On the other hand, in US, as you know, the finally Senate approved legalization to temporarily increase the government debits limit to 28. Let me check to 28 actually. Yeah, to 28.4 trillions. So the debt limit increased to 28.4 trillion temporary, and Senate approved that. So on the other hand, this one also helped the total the market environment. And as we can see, the last night we saw this positive data and this positive environment helped us Wall Street to close high. Dow Jones almost 1%, S&P 0.83, and Nasdaq more than 1%. In this future market, this positive environment continued, even if they are trading flat. But as you see that here, this is a VIX chart. Let's go to the charts. This is a VIX chart, and as you can see here, the chart shows us that yesterday the market risk is decreased all around under 20. But since we are waiting today for the employment data, let's talk about the employment data. Give you some employment data and say that why the VIX didn't go more low and stayed here. The thing is that employment numbers that we had from ADP yesterday before and 2 days ago, and yesterday's jobless claims. Jobless claim about the ADP, as we talked about 500,000 new jobs was positive sign. And yesterday, finally, after 3 weeks decline, 3 weeks increase in initial jobless claims, finally it started to decline. And comparing with 340 some K, more than 340,000 market estimates, we had just 326,000 initial jobless claims. So it says that after 3 weeks increasing, initial jobless claims is down. On the other hand, as I days in the last days I talked about that we had PMI data increasing, we had market factory ordering increasing, we had retail sales increasing finally in last month, and 2 weeks ago we had durable goods order increasing as well. So all these numbers together with the higher inflation is telling us that while economy is going fine, we have employment data on a good position, on a good situation, and totally employment market, labor market is fine. Yesterday we had job cuts numbers as well to increase 17,000 some hundred, as all was between the 17,000 and 17,000. Let me tell you the example. Yesterday job cuts numbers also that came out told us. Let me see the numbers. What was the numbers? However, this a little bit increased, but this increase was not that. The job cuts 17,895, almost a little bit shy than 18,000, up from last month, or from August, which was 15,723. So job cuts also increased a little bit. So it means that the job labor market is not something bad. Actually, I think it's good, because since that initial jobs claims decreased, if the job cuts increased, it means that the market is getting back to its normal situation. When the market sees the very low number of the job cuts, it means that we have a shortage in the labor market, because the companies, whatever it takes, they want to keep their employees, and they don't want to kick them out, actually, in some not that much nice words, because they scare if they don't find someone else instead. But when the market situation is fine, they don't scare of this, just finding new employees and asking their employees to resign, or cut their jobs, cut their not employees. Anyway, this numbers totally is telling us that the economy is going fine. Employment, labor market is fine, and at the same time inflation is increasing. So today is the most important economic data that we have before November 2 and November 3rd, November 2nd and 3rd, that we have the Federal Reserve meeting. November 2nd, November 3, we have Federal Reserve monetary policy meeting. Before that meeting, this is the latest, this is the most important economic data we have. So if today we see NFT number above 500,000 new jobs, it means that we have to wait for faster tapering, and it means it will lead us to faster tapering, and it will lead us to earlier start for rate hikes. Then we can see the rate hikes in the next year, in the first months of the next year. This is what the market situation. So that lead the VIX to stay low, but to send it low. But as I told, since we are going ahead for today's NFP, I don't think so that it will go lower than this. But after NFP numbers, if NFP numbers fine, then it will go lower, and if NFP numbers higher, NFP numbers missing the expectation, then it will go higher. So it's dependent on that. So however, the Chinese market also helped here, and on the other hand, the Chinese positive reaction after reopening the long time holiday helped the oil market as well. As you can see here, oil price increases. The WTI increased about $79. This is the futures, and above $79, telling us that the positive environment that the market take from the US stock market that closed high last night, increased amazing last night, and Chinese reopenings on a positive situation also helped the situation. So totally the market is fine, and it helped the oil market as well. However, as I told, if today we have better than expected economic data, it means that we cannot see stock markets higher than these levels. We can spend all the complicated. Let's talk about S&P 500, Nasdaq, and Dow Jones. Seeing them higher than these levels after positive data of today, it's gonna be a little bit hard. It's gonna be a little bit unexpected, because these, the thing is that after this kind of situation, when we have this higher inflation and better economic data, if we go to the faster tapering and starting the rate hikes, it means that the economy will have less support for a few months. I mean, less support from earlier, but this weakness in this economic in the stock market will be temporary, because At the same time, it means that the economy is fine, so it can improve in a midterm and a long term. So in the short term, we can see a little bit more ease under these levels. Under in the cryptocurrency market, as yesterday we talked, we could see still a little bit ease in the market. Still, this weakness in the market is. We can see that still this weakness is keeping continuing, and we can see the Bitcoin in the lower levels as well, especially if it breaks now we are almost under 54k. Technically above 50k is still uptrend, but however, breaching under 50k for the Bitcoin, it will be this time will be a bit more harmful because it can take us to much lower levels. But totally, the technical indicators telling us that a little bit ease and weakness in the prices is started. About the Euro USD, today, as I told you, if we have the positive data, one of the reasons it can help the US dollar to increase, and increasing US dollar will keep the pressure on the Euro USD, and we are waiting for the Euro USD to see it under 1.15. And if it happens, we can see that. On the other side, if it cannot happen, if it not happens, so it means that Euro USD will be on uptrend. One of the most important notices, one of the points that we have to remember about the euro, that European Central Bank (ECB) in its last meeting repeated that they are not going to change the policies at least by year end. So the dovish policies that we have from the Central Bank of European Central Bank, it can continue. At the same time, if with today's data we see that the Federal Reserve goes to the dovish hawkish policies, a little bit tightening policies. So it means that the USD will be on a more in a stronger position against euro. So euro USD's overall downtrend still can continue to be. This is the overall market. So today, keep your eyes on employment data. Besides the NFP numbers, don't forget to check the unemployment rate. Don't forget to check the average earnings hours. These numbers all important. Probably if I have a time at the weekend, I will create some short video about these numbers and how they're gonna affect the market in the next week. So I will try to make it on Saturday if I have time. I will do it. But totally, just take care about the market and take care about these numbers. Have a good day, and hope you will have a productive and profitable day. Goodbye.